Hello, I'm Vadani Ariam. This video is about what is financial forecasting. Financial forecasting is a process of conducting a method of predicting or estimating the business future performance. From this task, you will know how the business finances will look in the future. For example, you will predict a company's revenue. Financial forecasting is an essential function within business planning, budgeting, and operations management. Business leaders, investors, and creditors review these forecasts to assess projected revenues and expenses so they can estimate a company's cash flow throughout the accounting period. A company's stakeholders rely on financial forecasts to decide to purchase, hiring, and capital expenditures. Managers need economic forecasts to create budgets. In most cases, companies issue financial forecasts for the upcoming quarter or year. Often, projections will cover multiple reporting periods. A company must revise the forecast at times because of the changes in sales due to unforeseen factors. Why is forecasting important? A business has to maintain its cash flow. Therefore, the financial forecast is crucial for each accounting period as it wants to establish how it will cover the financial liabilities. It also provides data that leaders rely on when creating budgets. Likewise, financial forecasts weigh heavily in the financial decisions about a significant capital expense, hiring or other substantial investments. A valuable forecast indicates the resources needed, when they are needed, and how you are going to pay for these resources. A business might prepare and include the estimations on a draft format financial statement, like formal financial statements, except they show results for the past and future based on imaginary conditions. These statements go to investors or creditors who will consider them as they decide whether to give the company additional funding. They are also used to illustrate the impact of a recent or planned acquisition or merger. Financial forecasts are also critical for anyone creating a new business plan. What are the methods of financial forecasting? Finance teams create forecasts by gathering any available data to improve their projections, including sales, labor, expenses, cost of materials, and more. Much of that information comes from prior reporting periods, but finance employees also considered internal and external communication that could impact expenses or revenues. The finance department has historically created simple forecasts in Excel spreadsheets, and many still do. There are 4 different financial forecasting methods. Straight line method, considered the most straightforward approach to forecasting. Planners use historical figures and trends to estimate revenue growth. Financial forecasts using this method typically have designed beginning and end dates. Financial analysis can also use spreadsheets to create these forecasts. Moving average. Moving averages use repeated forecasts to develop estimates based on past performance and the patterns within. The most common moving average models are for 3 methods, 3 months and 5 months out. Simple linear regression, multiple linear regression. It is a method of analyzing the relationship between a dependent and independent variable. Using the simpler linear regression method, if the trend lines for sales, and profits rises. All is well for the company and margins are strong. Time series. Time series methods use numbers from specific time intervals like the last several months to predict future performance in the short term. For example, a distributor may look at revenue numbers and monthly growth over the past 3 months to forecast results for the upcoming month. Or an energy company could use it to predict oil prices over the next 2 months. These are the examples of figures using for the financial forecast. Financial forecast is very important for any company. In the next lesson, you will learn about financial forecast, the importance of financial forecast, why it is important, and how do you do that. All that I will discuss later. Thank you very much for watching this video. Thank you. I hope you understood the concept in this video. Thank you very much. Bye for now. Talk soon.